What is going on YouTube? Welcome back to another 2-Minute Tuesday. Today we're talking about asset classes, what they are and why they're important. So without any further ado, let's get straight into it. You can think of asset classes like the different flavors of the financial markets that investors can invest in if they want to. More formally, an asset class is a grouping of investments that have similar characteristics. It's debatable how many main asset classes there are, but today we're going to focus on the most common ones, those being equities, fixed income, cash and cash equivalents, real assets, and alternatives. So let's go through them one by one. First, we've got stocks or equities. Equities are basically portions of companies that have been issued by publicly traded companies for investors to purchase. When an investor purchases equity, they in exchange give money to that company. That money can be used for growth, development, so on and so forth. Equity is typically traded on stock exchanges, and the way an investor, so if you and I invested in equity, how we can make money is if the price of the stock went up or a dividend that was paid to us by the company for owning a piece of equity in that company. The asset class of equity is typically subdivided into different sectors, so you've got technology, healthcare, so on and so forth, as well as size of companies. So you've got large cap stocks, you've got mid cap stocks, you've got small cap. When we say cap, we're talking about market capitalization. This is how big the company is in the general market. Whenever you hear bonds or fixed income, you need to think debt, loans, interest payments. Why? Because investments in fixed income or bonds usually pay you back in the form of interest. Fixed income is generally considered less risky compared to all of the other asset classes. Yes, although within fixed income there are high risk categories like high yield, which I can talk on later. Generally speaking, if you're a risk averse investor, you would have a lot of your portfolio or a lot of your capital invested or allocated in the fixed income asset class. Then we've got cash or cash equivalents such as money market funds. The primary advantage of cash or cash equivalent investments is their liquidity. Whenever you hear the term liquidity, think access. If something is very liquid, it means you've got access to it easy. You can access it very fast and rapid. Cash is a liquid investment because we can get access to cash very quickly. However, investing in real estate means your money is locked up for a long period of time, and therefore it's not a very liquid investment. The term we use for that is illiquid. Real assets are things like real estate, infrastructure, and other physical assets that you can invest in. These are good investments because they offer protection against inflation. So every year inflation goes up, right? House prices tend to naturally go up over time. Investing in real assets protects you against inflation, and so that adds a bit of diversity in your investment portfolio. Because of the tangible nature of these investments, infrastructure, bridges, property, all of these things you can touch, that's why they're classed as real assets. However, one of the downside of investing in real assets is that they generally tend to be illiquid investments. So if you're going to put money into property or infrastructure, you can expect to lock your money up for 5, 10, 15, 20 years. So it's a very long-term investment. It's very liquid, but as a result, you can expect higher returns, generally speaking. And then last but not least, we've got alternatives. This category considers things like investing in hedge funds, private equity, venture capital. Real assets can be considered alternatives, but for this example, I thought I'd separate the two because it's easier to explain it. Investing in alternatives is also fairly long-term when it comes to the investment horizon. You can expect higher returns because alternative investments are not considered or always considered very safe. They're quite risky. Investing in hedge funds and private equity and venture capital are very risky investment strategies. You're betting on startups, you're betting on hedge funds, you're betting on risky ideas and strategies to make a return, which if they work will pay you great returns, but if they don't work, then it's going to cost you heavily. So the prospect of achieving high returns by investing in alternatives comes at the cost of illiquidity and pursuing riskier investment strategies compared to a traditional fixed income portfolio. Investors focus on investing across asset classes in order to diversify their portfolio. Rather than putting all of your money into equities, for example, it might be a better idea to put some money in equities, some in fixed income, some in real assets, some in cash, and some in alternatives. You're spreading your eggs across all of the different baskets. By diversifying your portfolio, it means that one event that impacts all of your equity investments isn't necessarily going to dampen or reduce the capital in your fixed income allocation, in your real assets, your cash, and your alternatives allocation. Diversifying just balances everything out and it makes it more safer for you, so you don't lose all your money in one go because of one event in the stock market. And that is this week's 2-Minute Tuesday. If you learn anything new, do give this video a thumbs up. It helps YouTube push this video to more and more people and it allows the channel to grow, so do give it a thumbs up. A lot of you that watch these videos are not subscribed, or you're subscribed and you haven't turned on post notifications. If you want to help the channel grow, do subscribe and turn on post notifications. It will mean a lot to me, so thank you in advance. If you made it this far in the video, honestly, thank you. Leave an emoji in the comments so that I know you made it this far. Thanks for watching, and make sure you tune in next time to see or learn another financial term, concept or idea in basic English. Thank you.